Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about the Robinhood registration for their IPO, and that's what I have here on the screen. I'll include the link to this down in the description below. What we're going to cover today is an overview of where the company stands, inclusive of their overall participation in various markets and how they earn money using transaction fees, using crypto, as well as pay for order flow. The other things that I want to talk about is some of the growth the company has experienced, some of the items from a dilution perspective, and then some of the pros and cons from my perspective and my opinion associated with the company. Keep in mind there is a lot of us, myself included, who have used Robinhood in the past and still have an account with them today. And for that reason, I recognize that I am not going to be necessarily putting the broker down. I just think that there are other brokerages that have become a better option for trading stocks going forward. So without further ado, what I'm going to ask you to do, if you are new to the channel, please consider leaving a like and subscribing because it is free to do so and you can always unsubscribe later. And if you are returning, then welcome back and I greatly appreciate it. So let's dive right in. We're going to be going to slide 121, talking about the overview. So here we've got a view of really where Robinhood came from and how they really got started. And it's actually an incredibly cool company. Myself personally, I got started with Robinhood in 2017 based off of a recommendation from my friend. So thank you, Chaz. I appreciate it. And that was the first time that I had used this platform. Prior to that, I was using TD Ameritrade. And at that point in time, I was having to pay $6, or technically speaking, $5.95 a share for every single trade that I was making. And during that time, I was in school and I didn't have a ton of excess money that I could invest in the market. And I just remember thinking to myself that every time I had $100 that I wanted to invest, I would immediately lose $6 or 6% of that investment when I went to go and buy stocks, which chiefly among that was Bank of America. So the thing that was really attractive about Robinhood, and really where I do want to give them a lot of credit, is that they changed how trading is done. Now, that being said, if you are not paying for a service, that means that you are not the customer anymore, you are the product. And I recognize that now, and as we dive through this, you can see that. But if you look here, you can just see the type of growth that the company has exploded upwards with. And again, you can see 18 million funded accounts right now, and that's pretty impressive. And this is a company that is intended to grow super quickly, and I think 2020 saw them blow that out of the water. And you can see some of that growth just again comparing 2018, 2019, and then the growth we saw in 2020 as that continues to explode higher, with a lot of this growth coming from primarily people who wanted to trade Dogecoin, not necessarily Bitcoin, but Dogecoin was a lot of the growth that was seen in Q1, and they actually highlight that here. So some of the things that are important to note is they did grow revenue $959 million. That's a year-over-year growth of 245%. And that's really what I want to highlight, although again, they also grew those funded accounts 143%. But this is a company that is growing incredibly quickly. However, they're still losing money. But like many tech-focused companies in this space, the goal is market share and user base, and then they will look to monetize later because it is very, very easy to raise money in this environment. So what I want to highlight very quickly is, again, just some of the growth that is associated with the company. And that was not the way to do that, but I want to focus on some of the growth associated with the company. You can see their monthly active users, and I think that this is a huge metric to use. So you've got nearly 12 million people using the product or the app every single month, which is incredibly impressive. For myself, I do look at the market on a daily basis, for better or for worse, but I am looking at it daily. However, the fact that there are this many people checking the account, logging in, maybe even making trades on a monthly basis, shows a lot of potential, again, for the more and more that the company is able to receive from those borrowers or from those users is incredibly important to them. That being said, you can see that they had the first strike at a net income in 2020. Now, keep in mind that this is non-GAAP reporting, and I do believe under GAAP that it is still a monthly loss or a net loss for this calendar year. And we'll see that in some of the financial data later on. But again, incredible growth. They did a very good job with the chart information right here. They do have a presentation version of this, but I'm looking at this directly on the SEC website just because I personally like to look at it a little bit better. But again, you can see that they are just growing incredibly rapidly, and a lot of that expectation and height right here was largely associated with the crazy swings that we saw in cryptocurrencies and meme stocks. So again, we'll just continue to go down here. One of the crazy things that I see here is in 2020, we had total deposits of $38 billion by the company. And that is insane to think just from the year before that this has more than tripled, nearly quadrupled from the year before. And that was 2020. I anticipate that has gone up in 2021. And I know that we'll see that more. So again, just continue to see that revenue is just growing and growing and growing. And that's how the company earned almost $1 billion in revenue. So you can see some of that here. Again, assets under custody. It's crazy that in 2020, so look at the 3 months ended for March 31st. So year over year, 4x in terms of assets under custody. That is insane. You're looking at $80 billion as of March. So I imagine that that's gone up depending on how well the market has been doing. This is a slide, or this is information that I think is incredibly important because you can see some of the growth where equities, so these are going to be your actual stocks and ETFs. You can see that the 3 months ended 2020, that was sitting right at $13.5 million or billion dollars, and now that is $65 billion. So already you're seeing huge increases in the stocks that people are investing in. Those are the long-term investments. But even more importantly, something that we are seeing a lot is there's a lot of risk associated with the options market. However, there's more than $2 billion in outstanding options contracts as of the end of March 31st. So this could materially have changed by now for better or for worse. But also cryptocurrencies was nearly $11.6 billion. Keep that in mind. Let's look at the year-end 2019 was $414 million on the platform. And now you're looking at nearly, and by now it could be higher, $12 billion. So that is a lot of money going in there. And keep in mind that that is incredibly important to note when we're talking about that, because this is a market that, again, a lot of Americans are still not familiar with cryptocurrency. And the fact that Robinhood has provided that platform is making their name associated with it in a really big way. So it's pretty impressive to be able to watch that and see that, again, continue to grow. You can see, however, that despite all of that growth, we're still struggling to make a profit. It is nice to see, again, in that adjusted EBITDA, again, non-GAAP is what I'm looking at, is that we're still largely going to be having a negative association with that, with most of that gain coming from a change in fair value of convertible notes and warrant liability. But if you look at just the company, again, even with all of this information where you take the net income, which is negative $1.4 billion, we're still not having a lot of success here. So I'm hesitant to say that this is really going to be a profit in that approach. We're talking about customers there, but I'm going to continue to scroll through here and highlight some of the information associated with revenue. The way the company earns money is they sell order information to their brokers, to the groups that they work with, the market makers, the house. They are selling that information. So you can see transaction-based revenues consist of amount earned from routing customer orders to market makers. So the reason that I highlight this information is they are selling your data. Remember, if the service is free, then you are the product. So they're selling that information, which it gives these institutions the capability to front run those trades. So I highlight that just to remind you that yes, this is something that this company is very well known for at this point in time, but still a lot of people are still pushing that money. I just want to make sure that people are aware of that, and that's actually what's going on right now. They're also earning interest revenues on margin loans and any of their other margin services. And then again, you also have the Robinhood Gold, and as well as any cryptocurrency offers. So you can see here for cryptocurrency orders, we route to various markets, and we believe that they offer competitive pricing. So just keep in mind, again, just because you don't see that trade come up, you are making a payment on that information. So we're going to continue to go down here, and you can actually see the results of all of that information down here. So the next thing that I want to talk about is I want to further update on what that revenue looks like. So here are the products that they are actually utilizing to make money off of. Again, they have fractional shares, recurring investments. They just started their IPO access. They also have a number of stocks that you can invest in. And again, they are selling that order information to these market makers. They also have Robinhood crypto, which is very, very important to note that the Robinhood does not allow you to deposit cryptocurrencies. Robinhood also does not own the cryptocurrencies, but rather they are basically holding the rights to those cryptocurrencies for you. The reason why I highlight this is because a lot of people think that there's a ton of value associated with this entire idea of DeFi. And if you are investing in crypto via Robinhood, just keep in mind that all of that information is tracked. All of that is going to be provided in a statement, and you technically do not own it. And this is also something that is not covered by FDIC insurance, so just be aware of that. The reason I highlight that is because there's a lot of risk associated with it, which you're not really able to comprehend if you are just purchasing it on the app and not reading some of this fine line information at the end of the day. So keep in mind that any of that sale you are making, there is going to be a transaction fee that you are taken into account with when we're kind of having some of those conversations. So that in and of itself is how the company is making money. Now, why could that all be a risk? So the way that their payment for order flow and their entire revenue structure may become a risk, as you can see right here, we're in the risk factors of the filing. On page 34, it talks about that payment for order flow right here. So the idea behind this is that it is not a binding contract. Any of those institutions could stop being utilized. You can actually see right here, 59% of total revenue came from 4 market makers. So again, if any one of those does come under fire, or they say, hey, we're going to utilize someone else, that has a huge potential for disruption in the market and could be cause for a lot of concern. The other thing that could happen is payment for order flow has been increasingly under scrutiny from Congress, the SEC regulators, and there is a lot of lawsuits currently against Robinhood for some of the risk associated with these practices. I highlight all of this to point out that at any point in time, if you lost one of these groups, you could lose a lot of money coming into Robinhood, because that, again, is how they are making this money. So they've already had to deal with lawsuits. They've already had to deal with working with some of this and additional scrutiny from the regulators. For that reason, I do understand why there's a lot of risk associated with this, as well as there's a negative public opinion associated with it. And you can see that they've even included in that the reasoning behind the fact, hey, people don't like this and they may go elsewhere. And you actually saw a lot of people leave the app associated with that, and they were not being included in some of the monthly users going forward. So it's important to note a lot of that information. The other thing that I would highlight associated with this is when your key business is based on a practice a lot of people don't like or understand, that's concern for me as an end user, even though I recognize that's where it's coming from. Lastly, because a lot of people don't understand this, I want to highlight one other immediate risk that I anticipate will happen the day that they IPO. So I'm now on page 114. It's kind of funny, there's like 70 pages of risk factors in here, which is not totally not normal when you're looking at IPO information, but it's funny just to see this here because I'm very familiar with the company. But some of the things that we see right here is they initially say, hey, there's going to be a lot of dilution in this stock. The other thing is I believe that they're really looking to go public at anywhere between $10 to $15 a share. And you can see that right now you're looking at a $6.41 is the value associated with the common stock. And there is a lot of stock that's going to be outstanding. And again, everything hasn't been finalized here. That's why you're seeing some of these blanks in here. But it's important to note that as this continues to be finalized, that they are saying, hey, we're going to have a lot of dilution. Again, a lot of companies have this information, so I'm not saying that this is a reason not to invest in the company. I just want people to be aware that they are already saying we are going to be further diluting the stock because we want to raise money when we believe that it's appropriate. We know that there's going to be ownership who's going to be selling some of those shares. Again, highlighting that because at the end of the day, this is a company that their people, insiders, want to make money, as well as the market makers who are going to be selling the stock. So just be aware that when they go public, the intention will be to sell some of that as well as to potentially raise money in the future. So be aware of that. Last but not least, let's talk about the financial condition of the company. So what I've got up here on the screen is the balance sheet, just to showcase that at the end of the year, or end of March 31st, 2021, they did have nearly $5 billion in current assets, which is a very strong position. Again, they did raise more money. You can see some of the cash in there is included. And so, sorry, I said current assets of $5 billion, current cash value of $4.8 billion, and current total assets of right at $15 billion. So the company does have a lot of assets that they are capable of drawing on, and I know that they have a strong base where they can raise more money if need be. You can see some of that information down below, but their liabilities are just as high. So there's not a lot of information associated with the fact, hey, there's a lot of owner's equity associated with this. Again, assets minus liabilities equals owner equity, and there is not a lot of owner equity available for the table. So what I'm looking at is, hey, they've got a lot of liabilities, and that's worrisome to me, combined with the profitability numbers we saw earlier, plus a lot of the risk. This company, despite their growth, despite what I think they've done for the industry, they have a lot of risk associated with turning a profit. And I think that we're only going to see more competitors. And you've seen that. Again, all of the major brokerages have turned free to play for the most part, as well as you see new entrants to the market, such as Webull, Tasty Trades, and SoFi. So there are these other companies that have entered the market, and it's going to be very difficult for Robinhood to continue their current growth rate, as well as the fact that it's going to be difficult for them to do so profitably. So for that reason, I may look to play the IPO. Again, there's going to be a lot associated with it. I do think there's going to be a lot of hype. I think there's going to be a lot of options volume. But at the end of the day, I'm not looking to hold this stock long term. That's just my personal opinion. That's how I feel about it. I've missed out on some good ones. I've missed out on some bad ones. So I'm not going to be offended if you think that I should be investing in it. But this is just a company that there's a lot more risk to reward, in my opinion. However, I still think there may be some short-term opportunity. So for that reason, I hope you all enjoyed the video today. There was a lot going on. I will have the link to this in the description down below because there is a lot more information. You can see my scroll bar there on the right-hand side. But I just wanted to cover some of the key points that I was looking at as I went through the document. So if you find this content helpful, please leave a like and subscribe. And if you made it this far, let me know in the comments down below. Thanks. Talk to you later.